Hey, it's January 9th at 3:39 p.m., so about 2 hours and 40 minutes after the close of the market. And what we can see here that today in SPY, we basically just went kind of sideways. We pulled back down to that EMA 8, then we traded back up and we ended not too much lower than where we were yesterday, so down 0.15%. So really, even though it looks like there's a large amount of movement that's happened in the last couple of days, we've just kind of gone sideways from yesterday's close to today's close. If I look at QQQ, it looks very much similar, except our QQQ is a little bit higher rather than a little bit lower than yesterday, but really this is just sideways movement. We started out that EMA 20, traded up above that EMA 8, and then we flattened out and ended up pretty much where we closed yesterday. If we look at the Dow Jones did not perform nearly as strongly. So it got stuck at that EMA 8, so we are still significantly down from yesterday. And if I look at the IWM, it's pretty much the same thing, except it's even weaker. It got stuck at that EMA 20. It didn't quite make it above the EMA 20, or at least it didn't stay above the EMA 20, and certainly didn't make it to the EMA 8. So definitely money not yet coming into the IWM, money not coming in to the Dow Jones. This is really QQQ phenomena, which helped drag up the S&P as well. So since this is not broad-based, we need to be extremely cautious. What we're seeing here is that when we gap down over here, all we did was dip down and return to that same level. So it's going to be very, very, very critical to watch QQQ, see which direction it breaks. Are we going to start filling this gap and then hitting this C green line over here, or do we break down from here? If we break down from here, then we're probably going to start touching that EMA 50 right here. If we do manage to get up to the C green line, then we have another pause, and then we'll see then the all-time highs, and then we'll see just how far this can go before we get a deeper pullback. Now, just because we're anticipating a deeper pullback doesn't necessarily mean that it's going to happen. There's no 100% guarantee that it will happen. So in the meantime, it is the prudent thing to just keep trading this upward trend that we're seeing, just with the tendencies that, hey, we're just gonna keep on continuing in a trend. Even though the possibility of the pullback is strong, the trend is still the trend. And so we don't expect the trend to break necessarily. We're just saying, hey, we may have a pullback over here. And then instead of trading in this slope, now we're trading at this slope. Sort of like what we had over here. We were trading like this, and then we broke down, and so now it looks like we're maybe trading like this. So overall, that trend is not different, and if you play a longer term game, then you just stay long. So if you're playing super short term game and you're trying to time this, you could maybe get it wrong. So the higher probability thing to do is to still remain long, and if we get that pullback, as long as we don't do a trend reversal and a change of trend, then eventually you'll be right again, and the trend will continue, and then you'll be fine. You'll just have to hang on longer maybe than you might prefer, or longer than you had originally anticipated. So right now I'd be looking at 2 time frames in my investments when I go long, and then hedging to the short side in case that we do break downwards. So we want to make sure that our portfolios are reflected in that philosophy, or at the very least what we can do is we pick a smaller allocation of our portfolio. We allocate more towards cash, and then we have 1 or 2 smaller positions. Well, I shouldn't say 1 or 2, depends on your portfolio. We have a series of smaller portfolios, so we're maybe half or a quarter allocated versus what we might normally be. So we have a whole bunch more cash than we might normally have, and we just pick our direction. And at that point, you might say, okay, well, it's slightly more likely to go up, or I believe in this pullback, and so you're pointed short. And that way you still take advantage of a move, but if you've picked the wrong direction, it doesn't cream you. It doesn't hurt you really badly, but if it surges and moves in your anticipated direction very strongly, you still get a nice profit. And if it just sort of kind of goes in your direction, then you make a baby profit. That's not too bad of a prospect right now. So right now, if I was starting a brand new portfolio, I'd be super cautious. I wouldn't be allocating all my cash into it. Even now with portfolios that I have, I'm starting to pull cash out, pull risk exposure out. So I'm prepared and I'm not too high affected by a move in the markets. So right here we're saying is that we're pretty much at critical levels at QQQ. We're either going to break down or we have a few hurdles to get over before we can continue to move upwards. And what's really going to strongly influence that is the TLT. Right here we traded up to that MA200 to the EMA 20 and then we rejected and we're pretty much flat on from where we opened, but down 0.64%. We still haven't made a new low right here. We still have yesterday's low as the bottom, but if we keep trading down, then that's downward pressure for the QQQ. That's the highest risk. Right now, that is the slightly more probable event is for the TLT is the kind of break down a little bit more and pull back a little bit more. So we would normally say, okay, well, QQQ, that's probably the higher probability event as well, pulling back to that MA50. But of course, that's counter trend. And we just want to be very, very, very careful anytime we go counter trend. So allocate accordingly. You shrink your risk size if you're going to go to the short side. And then to the long side, just know that, hey, it's a little bit safer because if I'm wrong in the short term, I can still be right in the medium term or long term, and so I have more chances of recovering. It doesn't mean just because it pulls back down to the MA50, well, if I wait 2-3 more weeks, then I'll be right back where we were, and then we'll be even higher. So it's a little bit safer to be on the long side right now, even if we have an imminent pullback. So that is what we're looking at today. Like yesterday, we were talking about how we might not get a lot of movement in the markets the first half of the week while we're waiting for the economic calendar for the CPI and the PPI numbers to come out and for earnings results to start coming out. We definitely did not get that yesterday, but we did get that today. It's just sideways movement today. We played a little bit of catch up on Monday. Today we're just kind of going chopping sideways. Tomorrow probably same thing because that CPI number is going to be really, really critical. So we don't know how that number is going to come out. That's going to be the other thing. That CPI number will probably dictate the direction of the TLT, and that will dictate the QQQ, which will influence the SPY and everything else.